welcome to Money Matters, where your money matters to us. We have an exciting show today. We have a new co-host, Skip Massengill, and Skip is going to tell us about an exciting platform that he has launched. Good morning, Skip.
Morning, Tammy. Thanks for having me.
Oh, my pleasure. It's going to be a great show. Skip, I hear you launched a new financial platform. Can you tell us a little bit about it?
Yeah, it's actually a resurgence of a platform that's been out there for over 22 years. I'm just bringing it to the market in a different way. Basically, we have a combination of 3,100 banks around the country, and we can FDIC up to $250 million in overnight money markets through those banks and maintain the FDIC insurance.
Wow, that's exciting. And how big is the platform?
It's we're right about 700 billion. That's with a B at this time.
B as in boy. That's a big platform. Well, that's really sounds exciting, and I hope I get to use it for some of my clients.
Yeah, I mean, it's really applicable to do a lot of work with corporations, hospitals, nonprofits, because there's a corporate governance angle here that a lot of users aren't aware of. Banks obviously want to make their spread between what they pay you and what they make off of you. So they may pay you 1% in your money market and lend it to me at 8%. That's their spread. That's how banks make money. If they get involved with this, and many of the banks that you deal with are involved with the program, they just don't bring it to your attention. And from a board, I sit on a lot of boards. And from a board's perspective, the corporate governance is very key to, especially their auditors, that they could do this. And if they choose not to, you have to have a pretty good reason why.
Okay. Well, that sounds really interesting. I know my business where I help companies sell themselves or make acquisitions. I'm always struggling with what to tell clients as to where they should safely put their money. So this sounds like with the FDIC insurance, a very good place to at least park it until they figure out really what they want to do moving forward in their lives. Do you think that's safe?
No, it's daily liquidity as long as you call me by 10:30 in the morning up to 250 million. So handles most clients' needs. But tell me what's going on in the M&A. There's a lot of stuff
going on in the M&A world.
Getting done out to next year. What's happening in your world?
Sure. Well, as you know, rate cuts do help us. And so the M&A activity has picked up this past summer, and it is going full speed ahead. But what's happening, I think, is people are anxious about whether the good times are going to keep rolling. So more people decided they should sell their businesses and not take a chance at risking devaluation. That's what I think perhaps is going on. And then on the buy side, there's a lot of international clients that have called us because they want to acquire businesses in the U.S. So there's activity on both sides of things. So it's a good time to be in the market, either buying or selling businesses in the middle market.
Well, with so many people running for the exit door, is that actually having a negative impact on the monetization value and the spreads?
No, not at all, because there's so much dry powder out there, both with private equity and also corporation. There's over $6 trillion that needs to be invested. So the question is, where do we put it? So that's a lot of dry powder. So it's actually driving up valuations.
Understand.
So I think we have a question from our audience. We should probably take that question and then introduce our guest. So Roger Wellington from Philadelphia says, what are some cash investments that I can make to get monthly dividend payments? That sounds like a question up your alley, Skip.
Yeah. Obviously, that we have the cash management program. We also have a laddered CD program. So you can have a combination of cash, money market, overnight availability, and 3, 6 months, 1 year, 2 year certificates of deposits. Frankly, right now, the rates, even though when rates have come down, you're better off in the money market. You're making more money in the money market. Now, if you think rates are going to go down further, yeah, you might want to lock in, but a 2 year CD is around 3.10 and the money market's at 3.5. So it's all safe, it's all secure, but until you get to the point where you want to maybe invest in some other investments and equities, et cetera, the money market cash is really the king right now.
Okay, sounds great. Well, we have an exciting show with our guest who's going to tell us about a very interesting business that he has. So I'd like to invite our guest on. His name is Rick Makoujy, and he is joining our show. Welcome on, Rick.
Thank you for having me, Tammy. Nice to see you, Skip.
There you
So,
go.
Rick, tell us about your investment that you make and how you got into that business.
Well, shortly after the financial crisis in 2008, it became very apparent to me of the perils of financing goodwill. In essence, the amount that you're paying in excess of tangible assets, which provides some collateral security, much like Skip is talking about having FDIC insurance for the financial products that he is offering. So after doing some serious soul searching and consideration, looked at a variety of tangible assets and wound up seeing that a lot of people had pushed gold prices up, and it became really uncompetitive at that point. But looking at land provided a tremendous opportunity because obviously there's scarcity in the market, and I was able to purchase vast tracts of land in areas where there wasn't much competition. And to the extent one has cash available, one can get some pretty attractive returns.
So we're talking about raw land. Is that correct?
Raw land without improvements. We are not in the business of building office buildings or data centers or apartments and renting them out. We simply buy large tracts of land, generally in more remote areas, so that we can get the maximum percentage of the earth into our portfolio as possible.
So places like North Dakota?
North Dakota is attractive, but in our view, it's a little bit overpriced relative to some other states. So we don't currently have land in North Dakota. We have evolved over time and have about 17 states. We have land in 17 states and about 70 counties.
Wow. And what are some of the states?
We have quite a bit in New Mexico, California, Michigan, Maine, Arkansas, Florida, Georgia, Missouri, and several others. But those are the areas in which we've got greater concentrations.
And when you say large tracts of land, are we talking like maybe 1,000 acres or 10 acres or?
We have everything from quarter-acre building lots all the way up to 640-acre sections or square miles.
Cool. Skip, what do you think about this investment in raw land? What kind of questions do you have for Rick?
I like it. I mean, you're not buying them for cash. You're buying them on a leverage basis.
Absolutely not. We are only buying them for cash, and that, quite frankly, is our secret sauce. You know, years ago, I worked for Bear Stearns, and I worked on the block trading desk, and we were getting a nickel or a dime per share to trade large volumes. And as you know, the markets become much more efficient over time. And as a result of that, current spreads are obviously closer to zero than a penny. And we are in a market in which one can purchase land at a great discount if we've got cash available, which we do. We can close transactions in a day for people looking to liquidate their tangible, valuable asset, and we'll hold it for a month, 6 months, or a couple of years if necessary until we get the right retail buyer and are able to monetize the asset at a significant return. Our business model is primarily capital appreciation. And to the extent we have a slight negative carry of 1 or 2% of the purchase price in taxes, that's a cost that we're happy to absorb, as our gross margins are strong and have been consistently strong for more than a decade.
Right. And where's your funding source for the cash?
The cash is 100% my personal nest egg.
Okay.
So Rick, I would think with what they call now the K curve, meaning the rich are getting richer. So if you think about a K, the letter K, that's the upward part of the K, and the poor are getting poorer. It's the downward part of the K. I would think you'd have a lot more interested parties coming to you and wanting to take some liquidity off the table. Is that true?
Well, you'll see situations in which there might be an estate that's getting liquidated, perhaps a death in the family, and the executor is looking to monetize whatever assets are on the family's balance sheet. And we're happy to provide liquidity and accelerate the process of exiting probate.
So is it the older the population is, meaning the more people dying, the more demand there is for your service?
Well, that's not really the focus of our source of inventory, but that's one of our sources of inventory.
Okay.
We simply provide a platform where people can take an illiquid asset and liquidate it quickly without hassle, and we can handle all the paperwork associated with it. So we can make the process extremely simple. The process of selling land can be somewhat arduous, and people who are holders of the properties are often looking for someone to hold their hand through the process and provide liquidity within a day or two, like we do.
Oh, wow, that's cool. So it only takes a couple days once they find you.
It only takes a couple of days. There are a lot of online resources that enable us to do our due diligence very quickly, and we consider ourselves to be a partner in some respects to the people who are seeking liquidity. But at the same time, because we're able to act quickly, because we've got the reputation in the market to be able to provide fair and honorable transactions with quick cash, we are able to offer very low pricing to our customers. And they, in turn, are able to diversify their portfolios into what we consider to be a very underserved asset class. When people talk about stocks and bonds and maybe some Bitcoin or international stocks, a lot of times raw land is ignored. And as a result of that, we consider there to be a great market opportunity to move into the asset class, at least with a percentage of one's assets, and ride the capital appreciation wave as the population continues to grow, as people still need a place to stand, regardless of technological innovations or medical breakthroughs. Land isn't going anywhere, and they're not making more of it, and there are more and more people, and we need to grow food. And I think that the downside is extremely limited. And since we don't have any goodwill or debt, we feel that we're very well situated with our portfolio of about 2,600 individual properties in the U.S. To benefit from what I personally view as inevitable inflation from the financial imbalance of our government's budget process. In 10 years, we're going to have $60 trillion in debt. And, even at current market rates, we're talking about 30-40% of the entire federal budget going to interest expense. At some point, we have no choice but to monetize the debt. Much like a company with a lot of debt outstanding wanting to issue shares in order to pay off that debt, the shares are dilutive. The value of each dollar is the full faith and credit of the United States, which is substantial, and that's the numerator, and the denominator is the number of dollars outstanding, much like the number of shares outstanding in a company. So we think that the government is going to have to issue new dollars in order to meet its demands, devaluing each individual dollar, and we want to be holding tangible assets without goodwill, and believe that this is a strategy that should be implemented on a much greater scale. And since it's not, the prices are much lower than they're likely to be, and this is a great entry point for people to get into the land business, either as an individual or on a greater scale on a corporate level.
And do you ever, when you're buying the land with all the coastal flooding that's happened because of the climate change, has that impacted your business at all?
It hasn't. We do own some land near coasts, but we're generally not buying beachfront property. We're looking for land that is where we've got less competition. If there's a housing development where the lots are going between $30,000 and $40,000 each, that's too tight of a market for us. We'd rather be in remote Arizona where we can buy land at hundreds of dollars an acre and sell it for thousands of dollars an acre.
And when you're buying the land, do you ever have to clear it or do any improvements to it to get your returns?
We don't. We do get some incremental cash flow through grazing rights, billboards, selling easements to utilities. We've got some oil and gas leases, and we have done some subdivisions, and that has helped us, but we haven't done it recently. There are a few different ways to provide, current income from land, but our general investment philosophy is buy what's cheap, hold it until the appropriate time, and then sell it for significant capital appreciation.
So obviously there's a lot of people moving from different states to other states, both because of political leanings and also because of climate change. Do you follow those trends at all to see where you might want to be looking to buy raw land?
Not really. And the reason I say that is not because Texas or Florida aren't going to benefit from an influx of people from New York and California, but rather because we look at each individual transaction based on its individual value. If we feel like there's an opportunity to buy land in California and it's priced appropriately, we're happy to do so and we're ready to jump on that opportunity, much like we would with Texas. Now, we might have different expectations about what we're likely to sell that land for ultimately, but we would be happy to purchase land in any state depending on the individual circumstances.
Rick, what's your normal hold period?
About 15 months. Now, we could move the land quicker if we chose to do that, but my philosophy has always been preserve margin over volume.
You see a lot of data centers as clients buying the land?
We have land surrounding a large data center, and that land has improved in value considerably since we purchased the properties. And they continue to fly off the shelves, to be honest with you. But we're not typically purchasing land in order to sell to data centers. We simply own a lot of land in areas where data centers are probable, likely, and logical.
Great.
Cool. And has AI impacted your business at all?
It has, to some degree. It's making us somewhat more efficient with regard to the purchase process as well as the marketing process. So maybe we're a little more streamlined and individually more productive. But that's what I love about being in the land business. I don't know where AI is going to take us, and I don't know which companies are going to prosper or flounder as a result of technological innovations. But I'm pretty darn sure that land is going to be carrying value well into the future.
Yeah. I know that with the increasing size of data centers, there's also been some people who are building smaller nuclear power plants to power the data centers.
Correct.
So I think if you had land anywhere close to data centers, you would potentially see value in also selling to people who want to build the little power plants.
That's true to the extent, but when you're saying little power plants, we're not talking about a quarter acre. I'm not even sure how many acres, but you would have to have land of significant size in order to build a structure that large. Even a small nuclear facility is not going to be small relative to the typical property size.
Right. There's probably at least 20 acres. Yeah, you're right about that. What are some of the creative uses, if you have seen them, of people who have bought your land in remote places?
Well, the great thing about land as an investment is that it's more than just an investment. If you have a share of Apple stock, or you own a bar of gold, there's not a lot of intrinsic value, or not a lot of value in terms of utility. You own a piece of property, you can go camping, you can go fishing. We do have a segment of our customer base that's preppers, and they want a place to go in the event we have another coronavirus problem, or some other weather-related issue. You've got something that you can use, hunting, fishing, camping. And we have investors that not only benefit from owning the investment, but they benefit from the improved quality of life. Their family retreat becomes part of their lifestyle, so they get to enjoy the capital appreciation while they're also enjoying a better quality of life.
Interesting. Skip, what do you think about this as an alternative for some of your clients?
Oh, I like it. I mean, I handle a lot of family offices also, and they're always looking for something that's a little different, right? But you're not taking investors in, you're just using your own cash.
That's correct. I've been somewhat conservative over the decade or so that I've been doing this, and basically rolling retained earnings forward and not taking on any debt whatsoever. And to the extent that's constrained our growth, I've been willing to accept that, having a fairly conservative philosophy myself. To the extent we had 30 or $50 million to invest, our IRR on each individual piece of land over a 10-year period has averaged over 100%.
Well, I have investors for you when you're ready.
Yeah, I'm sure you do, Skip. That's why I brought
You
it
can even
up.
package a deal and give you a whole bunch of cash from them to go invest, and
But where are you going to get that kind of
return.
return? Where are you going to get that kind of return secured by the best tangible asset ever created?
Right.
You're preaching to the choir. Let's do a deal.
All you need to do is be willing to accept a slight negative carry. But with that kind of capital appreciation, one would be remiss to avoid this asset class. And I think too large of a percentage of our population overlooks land as a place where a portion of their assets should reside.
I have some land for sale in Florida.
Always happy to chat, Tammy.
Yeah, just easy. What other questions, Skip, can we ask
Have
Rick?
any mistakes that are on your front of mind that you won't do again?
Well, yes. I originally was operating this business by myself, and I made a mistake. For example, I was keeping the properties in a spreadsheet, and I didn't cross off one of the properties that had been sold, and I accidentally sold it twice. And so I had to go to the customer and apologize and offer to give their money back or a better property. And it worked out fine. They were fine with it. But, keeping track and being very careful with regard to attention to detail is important. And, we have a very large inventory management system now, which is absolutely critical, which helps keep us in line with regard to making sure inventory is appropriately categorized. Mm-hmm. And it also helps us, and you talked about AI earlier, we're using some AI elements to improve and make the process somewhat more efficient. We've done extremely well in every single piece of land. So it's not that we've gone out and made mistakes in buying properties. In some cases, maybe it's taken a little longer to sell some properties, but the reality is the margins are so great that I'm willing to hold a little longer. Now, if we had a lot more money, we could easily move more volume to the extent we were willing to give up some of our gross profit margin. I, as a small business guy, have chosen not to do that, but that's certainly one thing that we could do to the extent that were to be an opportunity. There's also a lot of different ancillary businesses that we could utilize if we were to want to grow, horizontally. We have 4 notary publics on staff. We do all of our paperwork in-house. We could easily create a title company. We could invest in tax liens, and that's somewhat appealing. But the problem is we turn our money so much faster at such a higher return that tax liens seem to be too slow for me.
Yeah, we sort of call that stick to your knitting, right?
Right.
Right.
I've hired probably 50 people over the last 10 years. And some of the mistakes I've made were hiring the wrong people in a couple of cases. But now we've got the A team. The people that are on the team have generally been with us a long time. They know the process and they know our inventory. So another mistake I made was bringing on a couple of people that I shouldn't have. I've rectified that. We made mistakes with, I made the mistake with inventory early on. We've rectified that. So, we're never proud. And anytime that someone's got an opportunity for us to be better, more profitable, more efficient, there's no pride. We're happy to implement any process that will, bring more dollars to the bottom line.
Well, you mentioned you have over 2,000 properties out there, so going away from Excel is probably a great move.
That's true. But initially, remember, I was doing this all by myself originally, and then started hiring a couple of people in my living room until we got a little too big and it became somewhat cumbersome and had to move out. But it's honestly, it's the most peaceful, valuable business I've ever been a part of, and I've done quite a few things. I can sleep at night. I never feel like, if the market collapses, that it's going to have a material impact. We've got, 4 or 5, we've got, let's just say 4 years worth of revenue on our books now.
Mm-hmm.
So,
well, Rick, it's been really, really great learning about your business and having you on the show. Really appreciate you sharing with us. I think it was very informative for our audience. And Skip, welcome to Money Matters as a co-host. It was a pleasure having you on the show as well.
Enjoyed it, and thank you, Rick.
Pleasure to meet you, Skip.
Your money matters to us. So thank you again for being on the show and for watching live. Next week's guest is Joshua Waterston with Wiltech LLC. Thank you.
Thanks, Tami. Appreciate the time.
Tim.